All right, welcome people, welcome family to this episode of the Vision to Mission podcast. Today, we have two friends, close friends of the podcast. We have Mr. Herbert Johnson of State Farm Insurance, and we have Mr. Jacobi Jones of Goosehead Insurance, entrepreneur, family man, investor. Herb is an entrepreneur, entertainer, man of faith. Welcome, guys. How are you doing this morning?
Doing great, doing great.
Doing great.
All right. So for those who are new to the Vision to Mission podcast, Herb and Jacobi have been on my previous podcast, which was the Visionary Experience, a couple of times. And we've had some really great and engaging conversations with regards to insurance, various financial products. We're going to talk about that, today for sure, but we're going to talk about some other stuff. We're going to dig into some wealth building and legacy type of issues. We're going to dig into some personal growth and business growth type stuff. So guys, let's go ahead and start by digging in. So, from what I had sent you and what we were talking about before, right? No matter what the year, no matter what the decade, 80s, 90s, 2000s, generally a lot of people, for whatever reasons, have looked at the insurance industry, right, as just being a very boring, kind of bland industry, for whatever reason. And so, but over the past, I think from my personal experience, at least maybe 15, 20 years, or maybe shorter than that, the term financial services has really gotten much more interconnected and interwoven, right, within the insurance industry. And it's become much more prevalent. So can you share with us, why that particular term has become more prevalent with regards to insurance? Like, what are some of the financial products and what are some of the financial services that are offered to people today? So Jacobi, I'm going to let you go ahead and start with that.
Well, for me, I'll push that over to her because, to be honest, my wife is a State Farm agent, and we have a lot of financial products through State Farm. And I believe solely in all the products that they have. They're normally really pretty good, investing engines there. So, and I know, Herb, he's a pusher for it. I don't push financial products on my end. So, Herb being at State Farm, he might be a good one to answer those financial product questions.
Fantastic. What you got for us, Herb?
Well, there's a lot of misconceptions about life insurance that is out there. One, it's only good if people die. That's the biggest misnomer that is there. Because one of my favorite products is the universal life product. And here's why I like it. It's because you can dump in as much as possible and it's tax deferred money. It's almost like being your own bank. You put your money into a banking account, you're getting 0.05 or something like that. It's not even keeping up with inflation. So you're actually losing money for long-term savings if you put it in the bank. But if you put it in a life insurance product, then you're keeping up with inflation, but you can overfund the policy to the point where you make the cash value amount grow and you have access to that, which we call a living benefit. And, some people are like, well, they into this, get term and invest the rest. But sometimes the average minority family don't have that money to invest the rest because they're not educated on investments. And everybody who know what happened in 2008, my 401k became a 2-1k. It got destroyed. It got annihilated. Mm-hmm. And why? Because of the housing market crash. So life insurance is a safe place to put your money.
Got it.
It's not heavily advertised by the government. You know why? Because they can't tax life insurance.
Okay. So define what tax deferred means for those who are listening and don't understand.
Tax deferred is the after tax, after the money's been taxed. Means when you get your paycheck and you work as a W-2 employee, that money is taxed. So you got gross and you have net, right? So the money that you take from your paycheck, you put it into a life insurance policy, which based on the tax codes, unless you hit what we call the modified endowment clause of the universal life policy, that's the only time that the government will slap 10%. But if you keep it within that endowment clause, then it's not looked at as income. So it's different. You don't report life insurance cash value as income. So, but anybody who's out there, talk to their tax representative, because I'm not a tax person. I'm a life insurance specialist, but that's what is available. Then there's other products that, State Farm doesn't sell, like index ULs and all that type of stuff. And I have partners who do those things as well.
But you push mutual funds, right? And 401k. I mean,
we push mutual funds, 401ks, and all that type of stuff.
What's the child one, Herb? The child for college savings one. What's the name of that one?
What we call
we had that with the State
juvenile policy.
No. We guess
the 529.
The 529, yeah.
The 529
plan.
That's another good one.
Typically it's state specific, but I think they moved it like the child can go to school in any state. Right. Anton, can you look that up for us?
So I'm not an expert at that. Ray is. So when we get a chance to invite Ray on, who's a certified financial planner.
Got it. So let me ask you this: what's the difference between? Because I know you said like a universal life policy, right? You have that. Mm-hmm. You have an indexed, right, which is indexed to some, whatever particular area in the market. But then you have a whole life policy. So what's the difference between like a universal life policy and a whole life? Like what's the fundamental difference?
Well, they have some similarities that they're both permanent policies, but unlike the universal, the whole life is not flexible. So you got to pay a certain amount each month. There's no flexible premium on a whole life policy.
Got it.
On a universal policy, you can underfund the policy and overfund the policy. You can skip years. You don't have that flexibility with a whole life policy.
Okay, got it. And so is there like some type of a penalty if you withdraw within a certain period of time?
No, there's no penalty, but if you surrender the policy in a certain time, there's a surrender charge in the first 3 or 4 years of the policy.
Got it. And so those, and these days, are those some of the more popular types of financial products that are out there, or are there some other things, besides that are
universal life policy is popular among the people like salespeople or people who have their income fluctuate from time to time. Mm-hmm. It's not good for a person who's older. Sometimes they want stuff more stable. Right. So sometimes they'll get like a 10 pay, 20 pay whole life policy. But for a salesperson who the income goes up and down and they have good months, bad months, and all that type of universal is a perfect product for them in terms of life insurance coverage.
Okay.
Or understood. Someone who's young and they don't really believe in life insurance, universal life insurance is good because it gives them the power to dump money into another vehicle other than a savings account.
Yeah.
Right. Where you're not really going to earn much anyway.
Right.
For sure. No, absolutely. And so Jacobi, so where you are, what are you more focused on than with regards to the insurance part of the industry?
For my business, I push home, auto, a lot of commercial insurance as well. I do life, but not much of it. The majority of the life that I'm pushing is I work a lot with, a lot of minorities, people that don't have a lot of disposable income. And so my policies are mainly the term policies.
Okay.
One thing about, life insurance is that the reason why I think a lot of, the poor population don't really invest in life insurance is because you can't, a lot of it, you got to put, money up now, but, you're looking only to really reap the benefits when someone dies normally, right? Of course, you got the ones that that Herb was talking about, but, those monthlies aren't as cheap as the term policies. And for me personally, go back to what Herb was saying is that, they're not really advertised because they're not taxed. That's one reason. But for me, I tell people, I think the reason why they're not advertised is because, if they get these life policies and they're in a minority, it's going to be a big problem. And Herb, he can tell you now, you can look this up. Let's say if you got a 18-year-old between 18 and 30 years old, he can get a $1 million policy, right? A $1 million policy, and it might only be $35, $40 a month. Okay. That's cheaper than a cell phone bill, right? And so you look at somebody 18 to 30 years old in Baltimore, right? They probably got almost a 60, 70% chance of dying before they even reach 30, right? So imagine if they die and, a big company, whatever these companies, they got to pay out $1 million. And then you look at, every weekend you got 3, 4, 5, maybe 10 kids dying in one weekend, and they paying out $10 million a weekend, off of these policies that they have. I mean, I think that's really going to shake up, the power structures here in America. They definitely wouldn't want to pay that money out. They not only are they making the families richer, which they want to keep you in poverty, but imagine if Black people start being made millionaires every time we see a young Black male die. You know what I'm saying? And not only, like I said, they'll get richer, they'll be able to afford a real lawyer, not just an appointed lawyer. As these companies, start losing money, they're going to say, hey, maybe we need to start educating these people because an educated person is less likely to die. Maybe we need to put more money into the school system because, a person just who's educated, like I said, is less likely to pass away. So for me, on my side, I'm pushing the term policies. I think that if you live in a poverty-stricken area, if you have a child 18 between 30 years old, you need to get a $1 million policy, even if it's a $500,000 policy, could be $20 a month. But you definitely need to put that in your budget. And just because you look at every time someone dies, you got to go around for the family, asking for money for the funeral, this will solve that issue as well.
No, absolutely. And so, but let me ask you this. I mean, it sounds like, it sounds like a hedge, meaning like, okay, you're 18 to 30,
right? You're
in a city we can just go around to different urban cities, right? Baltimore, Philly, Chicago, LA, New York, certain parts of New Jersey for sure, whatever. Yeah. But I guess the point is, if I'm a parent and I have an 18 to 30-year-old and I'm in an urban area, I'm in the inner city. Well, number one, I want my child to live, right? I want my child to have a family. I want to have grandkids. I want to see them to live a full life. But how would you explain that to people? Like, well, your child does have a higher probability of getting killed, but you can, get a payout as a result. Like, how do you explain that to parents and help them to understand, there's a risk, right, with regards to where you live, but you also have to account for that. So like, how would you explain that to parents?
Well, let me tell you, I'm going to tell you the crazy thing is you really don't have to explain it. Mainly when I tell them the price of it, they be like, that man, Johnny down the street just passed away. They couldn't, afford his funeral. So-and-so just died this past weekend. They couldn't afford his funeral. He was just in high school, Right. So it's really a lot of less explaining. It's mainly about, hey, can you afford $20, $25 a month? I think that's the main issue there. And then, when you tell them just the benefits of it, I'm going to tell you what else. When you had that life insurance too, they don't want you to go to jail. You got to think about that. You got to think about if us three here, if we started a life insurance company and someone came to us and they're giving us $30 a month for $1 million policy, what don't we want to happen?
Right.
That's our investment now. You understand what I'm saying? Not only do we want them to die, we're going to be going to the White House trying to get speed bumps, let's say, speed bumps in the neighborhood. We want to get children crossing signs in their neighborhood. That person literally is someone who we want to live as long as possible. We do not want to pay out that $1 million. And God forbid, someone does pass away. Of course, now we're on the hook. And I go so far to say is, let's say if Trayvon Martin had $1 million policy, or even
Floyd.
George Floyd, or Eric Garner, all these names, right? If we paid out the $1 million, right? What we going to say? We're going to say, okay, hold on now. We just paid this family $1 million and he was an unarmed person. This wasn't a crime. So guess what we're going to do? We're going to do something called subrogation, right?
Okay.
Subrogation is the same thing. Like if you have Geico and another person have State Farm, somebody hit you, Geico pays your policy out, but State Farm was at fault. They're going to subrogate against State Farm, right? They're going to make you whole because, you're the Geico policyholder, for example. But the person from State Farm hits you from the back. So we're going to Geico, we're going to go ahead and fix your car. But now we're going to sue this company because their client hit you, right? It's called subrogation.
Got it.
So in that same sense, we paid out Trayvon Martin's family, right? But, or let's say George Floyd, we paid out his family, but the police officer now is at fault. So now we're going to sue that officer. We're going to sue the state. We're going to sue, the sheriff, everybody's getting sued. We need to get our $1 million back because we had an unarmed client.
Got it.
You think about that. I mean, on a bigger scale, you think about that for Black people, man, this really right here, what I'm telling y'all is reparations. You understand what I'm saying? This is your reparations, really. If we all pulled together and had our kids, especially in Baltimore and these low income areas, if they all pulled together and say today, and this is something that I don't need to be educated on. I don't need to, do any type of marching in the street. I don't need to. I can call whatever company right now. We all get together and, hey, we're going to buy this $1 million policy for our 18 to 30-year-old kids because they have a high chance of dying. And let's see what happens at that point.
So basically, you're calling them out. That's really what it sounds like. You're calling them to responsibility. And so that's really interesting. So let's kind of go back into what you're talking about here, because, a lot of times when you talk about the word reparations, right, it's a trigger term for a lot of people. And they're like, well, I don't owe you anything. And, they get into the whole, critical race theory in school. And, you're portraying one group as one way, you're portraying another group as another way. But what it sounds like you're talking about, Jacobi, is like, well, wait a minute, there's that financial aspect, right? That people can be owed that money legally, right? If something happens, to their child. And it kind of leads a little bit more into one of the other questions and topics that I wanted to talk to you guys about, is because you have these different financial products. You have this information, right? You have this knowledge, you have this foresight, what's happened in our community, that, we're not coalescing and we're not actually making that happen. What's happened in our community where we're not communicating this to people, or are we, and there's no action behind it? So what would you say to that?
Well, if I may speak, the problem that we have in our community is a lack of education on how financial products work.
Okay. And
for example, people will rush to mutual funds and stuff like that, but they won't rush to life insurance as a way to have a saving base. I've been educated, by one of my mentors, Ray. It's important to diversify your money. You got to have a place where you have your money that's going to be safe and the company's going to be there. Mm-hmm. So a lot of times when people shop for insurance, they get some unknown insurance company to insure them. And they don't check their financial strength. I know one thing, that State Farm, when it comes to death claims, State Farm pays within 72 hours of a death claim, which makes a difference. I've had people who tried to go to a cheap insurance company because they saved the money, but took 6 or 7 months after they lost a loved one to fight to get the insurance money, because that company is not either heard of or not proven, or a very small company that doesn't have the financial strength. So cheap doesn't always mean better. Mm-hmm. And I think also, I think sometimes this is how cruel the insurance company is. If let's say if African Americans were getting insured in Baltimore and they were dying at an alarming rate and people were paying out, then they will underwrite it differently. They were like, well, no, they're high risk. They will either up the insurance on the term so they won't be able to afford it, or they will, okay, you can't write in this state. We don't no longer write in Baltimore. And that's how certain things happen with insurance companies. It's just, for example, you look at the insurance in terms of car insurance in Baltimore. You got Craig and them stealing cars, right? And
Shout out to Craig.
Yep. Yeah. And so what happens is that the rates are ridiculous in Baltimore.
Mm-hmm.
The average person's paying $300, $400 a month for car insurance because they're in a high crime area. While you look at like Potomac or Virginia, where the rates are very cheap. You see what I'm saying? After the pandemic, right now Maryland is like, they way up there. They're the worst driving, probably the worst driving state in the country almost, right? With accidents. So all the insurance companies are going up in the state of Maryland. Geico went up by 30%. Allstate went up. We went up. Geico went ridiculously up because you know what? They didn't profit last year. They took a huge loss as an insurance company because they insured all the bad drivers with great rates. And when someone has a claim record of like 3 or 4, 5 or 6 accidents, and you have enough of those, that bleeds the company.
Got it. So what? No, go
see,
ahead.
what you're talking about, Herb, I understand what you're saying. A lot of people do say that, once we all start to get the life insurance, they'll underwrite it differently. But right now we got to use the tools we have.
Right.
You know what I'm saying? And if they change it, then we change it. You know what I'm saying? We got to go hard on this. We living in poverty right now. That's like saying, let's not escape slavery because they're going to kill us. And where we going to get our food from?
No, I think you got to have a 3-pronged approach. You not only have to get term, but you also got to learn how to invest and put some money away. See,
you do. But you got to remember
let's look at the actual kid who goes and buys some Jordans for $175 instead of putting it into an insurance policy. Yeah. And then next thing you know, when they want to buy their first house.
You're talking on a high level, man. We trying to get there. We got
to start educating people on a high level.
We're trying to get my man in high school to buy a mutual fund.
Right. But hey, come on, when I was in college, I had a virtual universal life policy coming going to Howard. And it took
now, Herb.
It took somebody like you. It took somebody like you who educated me. If you take a 17, 18-year-old kid, 19-year-old kid on your belt and educate him and say, hey, this is how you make money in America.
You could do that. You could do that.
If he looks at you and say, man, you driving a nice car, Jacobi, and you don't have to sell drugs, Jacobi, to make that type of money, Jacobi, what are you doing? Well, this is what I'm doing.
Well, see, this is my approach too.
And that's not the thing. I mean, you look at the average kid.
Let him talk, Herb.
I'm sorry. I'm getting
Herb. This is the thing, and I was where you were, Herb, right? Trying to get these kids to turn to, not buying Jordans and not buying a gold chain and the clothes. That's not going to work, right? I'm gonna tell you what works. What works is like what I was doing, right? I did it 2 weeks ago. The person who's going to buy the life insurance is the grandparents and the parents. Right. You know what I'm saying? You're not going to get these kids with this TikTok, social media, all this rap music. It's stronger than me and you. It's heavier. We can't control that. We got to get to the parents and the grandparents, right? So let me tell you what I tell them, right? If you put money into the lottery every week, how much is that? And how many times have you won? Now, let's look in the church. When you go to church, how many in Baltimore, how many parents do you know had a kid 18 to 30 year old who died?
Right.
Right. you have a better chance than winning on this life insurance than the lottery. Just to be honest, I hate to say it, but you do have better. It's a better chance of you collecting this $1 million policy than winning this lottery. And it is. It's just. It is what it is. You understand what I'm saying? So what do you do in the church, right? Check this out. So you ask them. So let's say if I got a policy that's that $1 million policy for a 25-year-old, like you said, it might be $30 a month, right? $35. And you don't have a lot of disposable income. And this is the people I'm talking to. Herb, you trying to get somebody who got a regular 9-to-5 job, this and that, right? What I'm telling you is that I talk to them and I say, hey, let's take one weekend where you don't pay your tithes and offering. I'm saying this in the church. Take one weekend where you're not paying your tithes and offering, and you're going to pay this 1 month up life insurance policy for your grandson or your son or your cousin. You're going to make that payment one time, right? And guess what? Guess what happens? If something happens to them, now you're going to be able to donate money to the church. The funeral is going to be at the church. It's all a full circle. You understand what I'm saying? So from you trying to go and get this kid who is his whole life is about wearing Jordans, it's not going, you're beating, it's a waste of time. But the grandparents and the parents who are bearing these kids, they jump on it like that. And it's not a no name. I'm saying you can go to State Farm and get these policies. Herb, you can pull up the quote right now, put it on the screen. Mm-hmm. This is what you need to be pushing for our community. You know what I'm saying? The people who you need to be pushing the mutual funds, yeah, cool. You can push it to me, but I'm not out there dying. My kids aren't the ones who are going to be dying. I think that if we can lift up the people in poverty, we all win. You understand what I'm saying? So I just think that the audience you're talking about is different than the people who really need to be lifted up and pull together for this life insurance, because, you know, the fact of the matter is the most people who you're trying to sell this mutual funds and stuff to, they probably got a small life insurance policy on their job. You know what I'm saying? Which is not good enough, you know, because you can leave your job and then you're 60 years old trying to get life insurance is not good. But I'm talking about that person in poverty who don't even have health care. You know what I mean? So I just think that I'm not arguing with what you're saying, but I think we're really talking about two different markets maybe here.
And I agree with you. You got to put life insurance, and the grandparents can do that. But then after that, I think there's a two-pronged approach that's there with life insurance. You have to be able to, okay, let's take care of the risk, but also let them graduate from that. We can't just stop at that.
Oh yeah.
We have to develop education of how life insurance is used, because the minorities they're way behind. The Blacks and the Latinos do not know how life insurance works.
Right.
The average community person.
Let me ask you, Herb, why don't a lot of Blacks and Latinos know about how insurance works?
Because they're poorly educated.
Why are they poorly educated?
Because
reverse engineer it. Why are they poorly educated?
Because it's not pushed in their community. Because
why is it not pushed in their community?
Sometimes it's withheld.
Why is it withheld? Right.
Because
we got to keep going back until we get to the source.
It's what Jacobi. I'm in agreement with what Jacobi's saying, but I said we got to take it a step further. It's up to me to educate my community. I'm the expert. Kobe's the expert. It's up to me to teach.
Right.
Yeah.
And so I leave that. Because just case in point, I'm gonna give you an example of something, Jacobi. I had a 24-year-old kid come in my office. He didn't understand life insurance. He was making solid money, decent. And I educated him on the UL. And he's like, wow, I can have that type of money saved up so I can do this. He didn't understand it. It didn't make sense. But when I sat there and broke it down with him, he ended up getting a policy. And that's fast forward 3 years later. He had an emergency. He said, hey, man, money's tight for me right now. I'm in college. And I just need $1,000. I'll say, well, you got $5,000 in your life insurance policy.
Mm-hmm.
And so he was able to borrow that money to take care of what he needed to take. He was like, man. So he became a believer. It's almost like sharing the gospel. People don't know about Jesus until you preach to them, right? You know, you got. But the same thing with life insurance. We can't just assume that our kids are going to be automatically dumb. We gotta educate and make. Wisdom comes from teaching. Just like your kids, Jacobi, are educated, right? They're educated young men. One is a pilot. How many black pilots you know that we know of? That
right. You've
done something that's beyond extraordinary. Why? Because the parents are educated.
Right.
You're a Morehouse grad, right?
Mm-hmm.
Your wife is a Spelman grad. I'm a Howard University grad. You know, American University. We're educated. So our goal is to educate. The problem is a lack of education in our communities.
Right.
You know, and same thing. We have Black-owned businesses operating with no insurance. So they have one claim, it takes them out.
Right.
Why? Because they're trying to be cheap. Man, I gotta save money. Then your shop burns down.
but here's the thing that I want us to talk about, and because I think Jacobi was going to mention a little bit about it as well. How do you directly address the lack of education?
Right.
Like, how do you do that?
Yeah.
That's the question that I'm posing. Yeah. So I'll let you start, Jacobi. We'll go back to her.
Yeah. And even go back to graduating from those term policies. What a lot of people don't know is when you have a term policy, you are actually guaranteed insurable after the term ends.
Mm-hmm.
So what does that mean? Guaranteed insurable.
So that means that if I get you a 10-year policy at 18, that means at 28, you're guaranteed to get another insurance policy before it ends. You understand what I'm saying? So between 18 and 28, things could happen. You can have a bad, I hate to say, cancer, or you can have something that if you wait until you're 28 or whatever, or even if you're 30 and you get a 10-year policy at 40, you might be uninsurable. Something might have happened in those 10 years where now you're uninsurable. You can be obese. You can, high blood pressure, diabetes, anything like that can happen. But if you get it at 18, you're healthy as you can be. So now you're always going to be insurable. You understand what I'm saying? So that's why it's good to get in early. It's cheap. You know what I'm saying? Not only are we're covering the social justice aspect of it, is what I'm saying is become a client of one of these billion-dollar companies, because once you're a client, they don't want you to die. And then, you look at, if it's 300 people in a neighborhood in Baltimore, who knows what, they might start buying them houses. You know what I'm saying? We can do whatever we can to make you guys live forever. So that's what we're talking about. But, as far as the uneducation about life insurance, when you look at, what we watch, you know what I'm saying? For example, a lot of things that we do is based on advertisement, right? You'll never see a life insurance commercial watching the Lakers or watching basketball, watching football, watching BET. You know what I'm saying? You're never going to see that life insurance policy there because, the dominant society, they automatically teach their kids about life insurance. So they don't even really need to advertise. You understand what I'm saying? But us, we haven't really grown up on that. And in our community, even when I look at my parents growing up, it's looked at as bad luck. You know what I'm saying? I'm betting on you to die. It's looked at bad in our community in a lot of ways, because how could you put a life insurance policy on your kids? Sometimes people look at that like, or I get a lot of people say, if I get that, my wife is going to kill me. You know what I mean? So a lot of people do say that. But I think the main thing is advertisements. A lot of our stuff is pushed through music. No one's talking about life insurance in the music. And we watch we watch sports heavily. It's not advertised there. So, the minorities are especially Black people, we're visual people. And whatever we're watching on TV is it. That's why the Jordans, the gold, we're buying things that don't matter. That's not helping us financially for the future. And if it's not pushed anywhere, then it's just something that we're not gonna buy into.
No, I agree, and I don't follow today's hip hop that much. I think it's a 10 steps down from the golden era.
Yeah.
But I think this guy from the Migos, what's his name? Takeoff, right?
Yeah.
Unfortunately got killed.
Yeah.
And I heard something somewhere where they were talking about the family is fighting over what he, his money, because there was no estate planning.
No estate.
Right. And so I don't know if this man had an insurance policy. I don't know what his family, unfortunately, is going through. But you got stuff like that. Like you said, it's like, they could have benefited greatly and been able to start a foundation, right? Or do something in his name, whatever. And I think it's completely true what you're saying. And it's unfortunately an imbalance, right? With regards to the advertising. With regards to, you have generational, passing things down with, like, we've talked about this before, like, it's just naturally understood within certain communities that, okay, you're going to be a homeowner. Like, people have seen their parents and their grandparents and great grandparents own a home. So naturally that's what they were going to do. Right. So looking at this article, it says here, unfortunately it says Takeoff died without a will, parents fighting over estate. Right? According to this article, and we'll put the link in the show notes. And it's just an absolute shame, because it's a man with a family, a man with friends, right? A man with loved ones who was taken down. And look at this. He said he had a net worth of, what was this, $28 million, right? Whatever it is. Let me put my glasses on.
Yeah.
Yeah, $26 million with no heirs and causing trouble. So again, that's just one example of someone who had quite a bit of money. But as you're saying, Jacobi, again, the person in Baltimore, the person in Northeast DC, right?
Right.
The young man. My question for both of you is this. So let's say you have an 18-year-old to, like, give it 21, 22. They've graduated from high school. They're either going to an HBCU, they're going to a community college, they're going to a regular 4-year college, or they've decided not to do that, which is perfectly fine. And they've decided to figure out a way to go into the workforce. Right. But they're not making a lot of money.
Right.
They're not bringing in a lot of income at that particular point in their life. Right. What would you recommend for them if they don't have access to their grandparents or their parents? What do you do? What do you do for those individuals that are in that in-between stage? Because you've got to get to a point academically, professionally, just growing in your maturity, or you become a money maker. You become an earner. Right. Yeah. So what do you do at that particular time frame to give them some runway to prepare themselves?
Yeah. For me, I know, at Morehouse, my accounting teacher, it was two things that stood with me and still stands for me big time. He says that, for Black people, we're not going to make as much money as the next person, as another person, another culture. So there's a few things we need to watch, right? When you come out of college, you definitely only need to buy a vehicle that's 10% of your yearly income. Mm-hmm. You're making $100,000, you got $10,000 to buy a vehicle, right? Another thing, number two is, and this is just a way to help you save and kind of try to get ahead. Number two is, as Black males, being married is number one. When you become married, you're so many percentages less likely to go to jail. You're more likely to buy a home. You're more likely to have higher savings than the next. So getting married, number two, now because you got two incomes normally coming in, right? So those are the two things. And then the third thing is that, you need to buy life insurance on you and your family, So those were the three things that he always instilled in our class as Black men, is those three things, buying a vehicle, 10% of your income, getting married, and the life insurance. So, and
you're absolutely right on that, getting married. I think with Herb saved so much money, he stopped having to get bail bonds when he got married. Herb is like, what are you talking about, dude? Every weekend, brother calling me. I'm like, dude, I ain't got the cash. I ain't putting up nothing for collateral. Then the percentages completely changed. So I'm proud of you.
He got married. He cared about himself a little bit more.
Exactly. started grooming himself.
Beating people up.
We're just messing around. So we're going to transition just a little bit here, and I want to talk about both of you as, young professional Black men with families, right? Let me just kind of flip it, because I was going to ask one thing, but I'm going to ask another instead. We're here in early January, looking back at last year. If you could rewind the clock a full year or even several months, personally and professionally, what would be one or two things that you would go back and change and or do different, specifically last year, kind of leading up to this year, personally and professionally? What would that be? So I'm going to start with you, Herb, then we're going to go over to Jacobi.
I think for me, I probably would have marketed myself a very different way. I would have went after doing a lot more advertisement personally, social media, than I did. That I should have started a long time ago. Doing more podcasts, doing more educational seminars, so that I can get my name out there, not just a State Farm Bank, but my name as a professional agent out there more.
Right.
I would have also done a better job of marketing myself in terms of in certain communities better, like targeting, like the area that I work in more. I've marketed everywhere else, but I have not marketed in White Oak like I could have done. And so that's one of the things I would have changed. I also wouldn't have wasted my time going to certain dealerships. I went to car dealerships before I went to real estate people. I get more of my referrals from real estate end of it for homeowners.
And better.
So that's another way I would have marketed myself differently.
Okay. And so that's professionally. So what would you have changed personally in terms of your own personal growth?
A little bit more focused, less distracted. I can get distracted by, either things at home or things personally. Like I think that's been the biggest battle for me. I'm not sure why. Is to not be distracted by the whirlwind. Because when you're an insurance agent, you got to deal with the customer service and you got to deal with the sales. And sometimes you got to balance the two and make sure you don't lose sight of the goal. I would have started my goals earlier, hitting my goals earlier, instead of waiting to the last minute to pull out miracles. Sometimes in December, we were like, oh, man, next thing you know, I'm crushing 30 policies. And I'm like, why could I have done 30 policies every month? But I show that under pressure, I have to, I can do a great job of hitting my goals then, but I need to be consistent. And I think that's what I'm working on, is being more consistent as a professional person.
Okay. Got it. Sounds good for sure. And I can relate. What you got, Jacobi? So what are some things that you kind of looking back professionally and personally?
The huge nugget for some of these entrepreneurs out here that I'm still working on to today.
Okay.
That I wish someone told me in the beginning, right? Sorry about that, guys. I don't know. I got it on Do Not Disturb.
Don't even worry about it.
All right. So
yeah, sure.
Look, they don't want y'all to know about this stuff. So that's why they calling me. Trying to get me to stop talking. So I have two things. So the business wise, right? Man, putting all my assets into a trust. These LLCs are not what we thought they were. Okay. And I'm going to tell a lot of people that the first thing they tell people buying real estate is start your own LLC. It's cheap. Woo, woo, woo. You got all these different benefits to, hide your asset, this and that. Is people are piercing through these LLCs. These trusts, man, the trust is the way to go. Number one, here in Maryland, if you have an LLC, it's $300 a year to register this LLC, right? And then the liability asset is not what you think it is. You got people suing LLCs, and then it's going to their personal because the LLCs is definitely on their personal taxes, things like that. Mm-hmm. The trust has not only when you set up the trust, you don't have the annual registration, so you're not paying the $300 a year, and it has way more legal.
Protection.
Have way more. I'm talking about putting my cars. I got my personal house in there now. I'm slowly getting all my houses that I own, my real estate houses, my cars, everything. I'm putting in these trusts. And, this is one thing that my kids will take off. We're just talking about that. If he had this trust, one thing setting up the trust, you name your beneficiaries right there. If you die, it goes directly to your sister, whoever you name. Mm-hmm. So the trust is the way to go. You won't have to worry about this probate. You don't have to worry about, fighting over this and that. It directly goes to the next person who's living that you assigned to. We need to start putting the things and the assets we have in these trust accounts, right?
Love it. Great.
It was something else I wanted to say about the trust benefit that I'm learning about too, having the trust, but I can't think about it. I'll come back to it. Personally, man, reading more. I'm going to tell you, it was kind of a blessing, the thing that happened with Kyrie Irving, with that Hebrew to Negroes. Man, I've been reading and I'm really finding out that the Bible is all Black history. You know what I'm saying? Mm-hmm. I'm finding out that, we're the main descendants from Abraham, and the 400-year curse started in 1619 when the first slave ship got here to America. So 400 years after 1619 is what? 2019. That's the 400-year curse. What happened in 2019? We had the pandemic in 2019. So now that the curse is over, I think that, it is a time for, Blacks, Latinos, this is all combination that we're actually waking up. And just things, more things are happening right now. You look at the admission for HBCUs, man. My son is trying to get HBCUs. They said this is the most they've ever had people sign up. Before 2019, I don't know if you remember, but a lot of these schools were going under because the admission was very low. Man, now you talk to every high school senior Black child, they're trying to get into Howard, Morehouse, Spelman. North Carolina A&T, Morgan, they're over. And if you can call any of these schools and they're like, this year has been the most, everyone's on the waiting list. They got all these kids on the waiting list. They got kids who get accepted. They can't come in now, pushing them out to next year. So I say all that to say, I think personally has just been reading, getting more educated. I tell people, grab a book on their favorite subject and, 15, 20 minutes a day, get off the phone, get off the YouTube, get off the TV and just read a little bit about some things. And that's when I learned about the trust too. Just reading about that as well.
No, I really appreciate that. You talk about there's a couple things you mentioned that kind of stoked my interest. We have the book downstairs, the 1619 Project.
Ooh.
Yes.
Oh my gosh.
Exactly.
I heard about it. I haven't read that.
That's amazing. First of all, the second thing is, you talked about the HBCUs, and I'm going to give a shout out here because I think a large part of the resurgence in terms of the popularity, it comes from Coach Prime. Coach Prime, and I don't watch reality shows, but doggone it, I started watching Coach Prime on Amazon. And the thing is, one thing that almost wells my eyes up, that gives me joy, is two words, which is Black excellence. And there is nothing like that, because throughout our entire history, we've been taught the complete opposite, that you're not excellent. You cannot be excellent. You don't have the capability of that. And, I think we definitely share that fire deep down inside of like, are you kidding me? Right. And so when I see, for example, I'm not going to get into too much of it, but, when him going to Jackson State, right.
Yeah.
In Mississippi, I didn't know where it was, before in Mississippi, representing that city,
right.
Giving prominence to that program. Right. and winning back-to-back championships. But the prominence, right, is huge. Giving the attention and the spotlight that it deserves helps to raise up everyone else. And now Ed Reed, you know, the Hall of Famer from Baltimore, go Ravens, right?
Yeah,
He's going, you know, is now down at
he's in
oh my gosh,
right?
Bethune-Cookman down there in Daytona, Florida. Right now he's there. But the thing is, the door was opened.
No question.
Right? You know, now the door is open and now it opens up much more possibility. I think that's the first thing. But I think the second thing is that a lot of kids, a lot of parents have woken up to the fact that, or awakened to the fact that these larger, more expensive universities simply aren't worth it to pay $50,000-$60,000 a year. You look at, you could go online. In fact, Anton, if you can go online right now and bring up what is the yearly tuition, room and board, just look it up right now for George Washington University or Georgetown. Watch this when he brings it up, just for as an example, right? You can get a great quality education from a historically Black college or university, right? That's an economic decision. That's a life decision. So what you're saying, Jacobi, really just, it kind of brought that up because I appreciate you sharing that. And, you know, it's about time that these places are getting their flowers, you know, for sure.
Yeah. And I think number two about the HBCUs, one thing that I hate to say this about my school, I won't say about no one else, or I'll say this about my experience. They didn't teach me to be a boss. So just to be honest, they taught me to be a slave. You know what I'm saying? They pushed me to work for somebody else.
Right.
And I think that's the next phase of it. When we get all these kids in, we need to push them to be entrepreneurs.
Most deaf.
You know what I'm saying? It's like we're going to these schools and it's a cattle call. You know what I'm saying? They're pushing you to be a corporate slave, just to be totally honest.
No,
you know,
I'm with you.
Absolutely.
Yeah, so I really wish that, you know, and I don't know if this is another podcast that we need to do, but if you look at my experience, the way I became an entrepreneur is crazy. You know what I'm saying? It's crazy that I had to go through what I had to go through to come out and be saying, hey, I got to be my own boss. You know, this is the only way to go.
Absolutely. You know? So real quick, before we come back to that, I don't know if you guys can see the screen. You know, and again, I'm not trying to diss, you know, GW. So there's no disrespect at all to George Washington University. But I just want to use this as an example, right? So if you're living on campus in the residence hall, right, $15,720 total estimated direct cost. Okay, $78,470. Books and supplies, $1,400, right? Personal miscellaneous expenses, $1,625. That $1,625 can go into an IUL, can go into a term life, can go right. Ooh. You know, that's just one school. We could probably pull up like the U.S. News and World Report, some type of some metrics, and we can look at it, and you can. It's going to be very similar. It's probably going to be on the high end. Is going to probably be here, right, along with the Ivy Leagues. But you're going to be starting on that 40 grand on up. And that's per year. So if you're not filling out that FAFSA form, right, properly, if you're not getting a Pell Grant, which a lot of Republicans tried to take away, okay, if you're not getting some type of scholarship or some type of, you know, some type of student loan assistance, and if you're getting, even if you're getting 70% of that, as loans, right? You're getting 30% student loan assistance. Take 70 grand, you multiply it times 70%. Now you're talking about 49,000 and change. You're borrowing that per year. What if you're getting 50% scholarships, 50% grants, right? You multiply that, just do the simple math. You're still borrowing $36,000, $37,000, $38,000 a year. You multiply that times 4. Okay. That's the debt that you're coming out with from the jump. From a school that's high. Can you make that bigger, Anton, so that we can look, so I can see that better?
And this information too is so important because, especially if you're a Black kid, when you graduate, you not getting paid as much as, you know, some of the other counterparts. You know what I mean? So you need to really keep your education costs at the lowest you can.
Absolutely. And so Anton, what's is this an average, or what is this for that you pulled up on the screen? Is this for DC? Right. So look at that. Right. So Howard went up about 1%, right? From 2019 to 2020, right? If you're in the district, 27,206, about 1%, more or less, a little bit less than 1%, actually, really, to 28,440, and then to 28,916 if you're in the district, So basically, that's half. Like it's less than half, really. Less than half if you're looking at that compared to GW. And again, there's no disrespect, but it's like, again, I didn't go to GW, I didn't go to Howard, but what's the real substantive, tangible difference in education that you're going to get? Right now, Howard has a medical school, Howard has a law school, right? I'm sure Howard has accounting. I'm sure Howard has a great MBA. Are you meaning to tell me that your academic and your campus experience is worth $50,000 a year more? Is that what I'm hearing? That the quality of professorship and mentorship and academic intake is worth that much more per year. All I'm saying is that colleges and universities have high tuition for one reason, because they can charge it and people pay it. It's capitalism,
right?
Not just in capitalism. I'm capitalist,
right?
They charge it, people go there, and they do it. That's the thing. That's the reason why they're able to do that. But once you have that shift that you're talking about, Jacobi, you never know. Then you might be able to see some differences. But go ahead, Herb. I think you were going to say something.
Yeah, I'm in agreement with Jacobi. They don't teach you how to be a boss. They teach you how to be an economic slave. But also, when you are a slave to these corporations, you have your student loans that you're paying back. Yeah. Or some people paying like $250,000 in student loans. So you start your life off in debt unless you are able to get a scholarship. And so, and there are scholarships and grants out there. I have a good friend of mine named Walter Pierce who helps kids get scholarships and grants. I'm going to give a quick shout out to him. And it's important to let people know that there's money out there for them in DC. If you're a DC resident, there's money out there. My daughter got a DC resident scholarship, 10 grand. So there's certain things that are programs that are there. But the most important thing, like Jacobi's saying, he wasn't taught how to be an entrepreneur. Now, when I was in the School of Business at Howard, there was an entrepreneur program that was there. And there's a guy, I remember Dean Harvey talked about Black ownership. And so that was targeted, and they're still trying to target it at the HBCU at Howard University, where my alma mater.
Mm-hmm.
But I think it's important that African Americans get educated on real estate and get educated on home ownership. And I think that's where, Brandon, that you come into play, so they can understand how to get investments, how to insure those places, how to properly insure their business. And I think that's the education that is needed to get Black ownership.
Mm-hmm. But too, like what you said, as far as, Herb, you were saying coming out and having all this student debt, goes back to what Brandon was saying, is that, maybe we need to look at another school that's way less,
Mm-hmm.
So you're not putting a lot of money out there. But like I tell my son, I said, really, to be honest, it just seems like college is like a holding place for someone who's 17, 18 to 21 or whatever. It's like holding time to where they haven't matured fully, mentally, financially. Is really a holding time. You know what I'm saying? And, when you look at, some people, they have their kids who never even went to college, but they're running, helping with the family owned business. I think some of us can, once more of us start to become entrepreneurs, I think we can look more into that, which, having kids, instead of paying all this debt for college, having them help run the business. They have a, automatic income coming in, and then they can take over, along the way. I think that's something that's looked at too, that needs to be looked at, because a lot of kids now, once they do go to college, they acquire all this debt, they come out, not having ownership, not getting paid what they want to get paid. And then a lot of times the parents' businesses go wayside, and it's all from going to college, you know what I mean? So yeah, I don't think it's even always the best experience for some kids too. I mean, I know that's another conversation, but I think here in America, it's just like when you're in 12th grade, it's like, what college are you looking at? That's the first thing people say. But it's not always the right choice for a lot of the kids out here.
No, and I would agree with you there. I mean, I went to Syracuse undergrad and American grad, and it's like, do you need to go to college?
Yeah.
If you're going to be a doctor, you need to go to medical school.
Right.
If you're going to have certain specialties, right? You absolutely. But otherwise, I agree with you 100%. It's not. It's been pushed upon us as the social and conventional norm. This is just what you do when you graduate. You either do that, you go to a trade school, you go into the military. It's like, well, you're not just going to be out there nebulous and just floating around. Yeah. I do think it's a huge part of a child's parents to help give their child some direction and teach them how to be wise in their decision making, to the best of their ability. So I would agree with you, because it sometimes it does feel like you're kind of in a holding pattern. What am I going to do next? I think that's a really good analogy.
And then too, like my major was accounting. Did I have to go to a 4-year school for that? I could have went to maybe a community college, accountant, bookkeeping. Some of these things, we just look at the 4-year school all the time, and some kids might need to look at 2-year schools, and they can easily jump in and start making income faster with less debt. I think that's another option too.
Absolutely. And I want to give a shout out. If you guys, Anton, you can look up this podcast. Shannon Sharpe, who was a tight end in the NFL, has a podcast. And I've looked at this one particular podcast twice. It's called Shay Shay. I don't like that name. But anyway, Shannon, don't come after me. He had Damon Dash on there. Okay?
Oh, man.
Let me tell you something. I've listened to so much stuff with Damon Dash. Damon Dash. Yes. I'm going to definitely give him some love here, because that man, all he talks about is, being a boss, entrepreneurship, ownership. And I videotaped a clip and sent it to some of my boys a few months ago, because he wants to own his own football team. He's talking about how he owns this arena team. And, what did he say? Like, Shannon Sharpe said to him, like, well, don't you think you need to kind of wait and get some experience? He was like, no. He's like, I want to own. He's like, the only language I speak is boss. And I was like,
that's right.
There you go. That's what he said. The only language I speak, and he had another thing he said. He said, look, my bank account is how thorough I am. I was like, that's a Baltimore saying right there. I was like, this man from Baltimore, because we're the only ones that use the word thorough. And so,
thorough, right.
But here's the thing. I fully subscribe to that mindset. Not that you have to go out there and you have to be independent, because we can't do things on our own. We need to have a support system around us, right? You got to have a team around you, right? I know we talked about, the Bible. God gave us the perfect blueprint on how to get things done, right? The perfect blueprint, meaning what? You had John the Baptist, who came forward as the advertising, the marketing. Hey, the Messiah is coming. Y'all need to get ready. The Messiah is coming. Jesus came, Jesus grew up, and he went out there. And what was the first thing he did in Mark chapter 1? He got his team around him so that he could spread the message, right? That's God knows what he's doing. And so I think it's really incumbent upon us, and it's our responsibility as Black men, to form our team or teams like this, and to make sure that we spread this message to as many people as possible with openness, honesty, and humility, right? It is not our responsibility how they take it in and how whether they do something with it, but we got to at least share the message with people, and we got to be able to give it to them in a way that they can understand and in a way that they can plan and execute, and then make some things happen. So I definitely appreciate what the both of you have shared with regards to that. But yeah, we gotta have that mindset. Why can't I own this? Right. Why can't I have get out of this employee mindset? Is an employee mindset bad? Not necessarily. We need employees to make this world run. Not everybody is supposed to be a business owner, and that's okay. Right. So, but go ahead, Herb.
No, I agree with that. What you're talking about. I think sometimes a lot of us go to what is comfortable, and we don't take chances or risk. Mm-hmm. But also in African American community, we don't do a great job of supporting our businesses. Mm. We'll go to. We have other cultures, selling stuff to us, right? Yeah. You got the Asians who have all these black hair products, right? And they sell it to us, but we don't support our own structure of people. Right. I think also, you look at lions, right? They hunt in packs, right? And I think when business owners work together, they are much more successful because you have a collective of business owners who are referring each other business and helping each other develop. I'm not self-made. It takes relationships to make it.
Right.
And a lot of times we don't know how to, as African Americans, be able to support each other's business and also develop each other. We also got to provide each other better customer service. As you can look at the difference between Chick-fil-A and Popeye's chicken, right? You go there and the service is totally different at Popeye's chicken compared to Chick-fil-A.
And a lot of that too is because a lot of Black business owners are first generation business owners. So
right.
Starting out. And I tell a lot of Black people all the time, you're trying to compare this new bank that's been in business since 1700s. You know what I'm saying? Or for example, whatever it is, a lot of us are first time entrepreneurs. So we're not, the best at a lot of the a lot of the customer service aspects of it. Mm-hmm. That goes a long way too,
well, it's not just
each other more than the next generation, and we're teaching our kids to make our businesses better too.
Right, but also customer service as a whole has dropped. Mm-hmm. Not just with our people, but just as a whole.
Yeah,
everything is automated. I'm old school, right? That personal touch will get a lot of people's business compared to the automated situation. Because when the automated screws up, then you're going back to the personal anyway. When somebody takes all your money out of your bank account, you don't want to talk to an automated service.
Right.
You want to talk to a live person to straighten up that situation.
No, absolutely.
And the same thing,
from a company perspective, it's like, what kind of company culture are you creating? Right. Mm-hmm. Are you creating a culture of service? Right. And a lot of times I look at it, even especially with sports analogies, if you don't have a culture of winning, you're not going to win. Right. Mm-hmm. Considering name multiple teams that just don't have a culture of winning. And I don't care who you bring in, right. It's that 400-year curse. That thing is just hanging on you. And you're not going to go to the next level because your culture just does not even allow for it.
That's exactly it.
Yeah. So look, guys, we're going to prepare to end off here in just a minute. Okay. 2 questions. I don't know if we kind of got to it early and I forgot. Coming into this year, we're at the very beginning. Okay. What are 1 or 2 things that both of you want to work on and do better this year, or even start period versus last year, like kind of going into it? So yeah, either professionally or personally, I would say just what's the main thing? Let's just kind of keep it to the main thing that you want to work on, again, either personally or professionally coming into this year. Herb, we'll start with you, then we're going to end off with Jacobi. One thing.
Educating my clients. Educated customer is a good customer.
Mm-hmm. All right, got it. And Jacobi?
For me, just protecting my assets. That's my main thing.
I like it. And I would say, definitely for
Getting
myself.
ready, and preparing for a recession.
Preparing for a recession.
It's not saying it's going to happen, but just be in the right position.
Yeah, everyone's talking about it. Everyone's talking about it. So we'll see. We'll see what happens.
I hope not. Yeah. I hope not. Of course.
I might do a podcast on that and kind of talk about what a recession is and kind of educate some people. And I think, I don't know if it was you, Herb, earlier, but I know that for myself, for sure, I need to use my time better. There were pockets of time last year where it was just,
man.
I wasn't sitting in front of the TV, but I wasn't doing whatever is productive to kind of move the needle, to move the ball down the field. And so I look back at that with a lot of regret. So look, guys, again, this has been an amazing conversation. I really appreciate you both. I'd love to be able to, revisit some of the more social aspects that we talked about this. We can schedule that again. I know that we've talked about this, but coming into this year, I really want to be able to be a man of my word and execute. I do think we need to put something together, maybe once a quarter or more, in terms of educating the community. Because you both bring a lot to the table. Go ahead.
Look at next steps on how to implement some of this stuff. We talk about
right,
but implement it. Just like I told you guys, and this is funny. How I told you guys I was getting people in Baltimore trying to get the 10-year policy. Yep. It was a lady who wrote the Jordan brand, and she said that every Jordan that is sold should come with the 10-year term policy.
Wow.
Imagine that. I mean, it's not that much. Imagine if it's capped out at $25. Right. Even if it's just for that, a month or 2 months, who knows, to get people started. You know what I'm saying? But she wrote that document to the Jordan brand. But yeah, I definitely would like for us to come together, having a conversation. I would like to, like you said, use my time better. Last year, I played a lot of golf. I became Tiger Woods. Oh my gosh. I played so much golf, y'all. I'm so good right now. My time last year was all in the golf. Oh man. So I'm coming out of that. Trying to do some more. Herb knows every time he called me, Herb, let me hit you back. I'm about to hit this ball. I'm like, man, good gracious. It was crazy.
Well, we'll talk about that next time, because there's something that's allowed you to be on the golf course. Right.
Yep, that's something that did.
In front of the computer grinding and versus on the phone dialing for dollars. So I do want to talk about that next time, because we didn't really get to that. I know that we talked about that beforehand. So Herb, what I need you to do, all right? Yep. I need you to end us off with a vision to mission, or a podcast, or entrepreneurship. Talk like a boss. Give us a jingle. Okay. Right. None of that Burger King napkins and other things that you did before. Give us a jingle that encapsulates this podcast that we just did. Come on, man. We're waiting for you.
Dun, 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 dun. Visionary Lending Podcast. We are educating the masses. Visionary Lending Podcast with the crew. You will be around our neighborhood, being educated with Visionary Lending.
All right. Woo! So yes, this is the Vision to Mission podcast, but it used to be the Visionary Lending podcast. It is all in the same pot of stew. Love you guys. Thank you so much for your time, man. We really appreciate this. Thank you so much, Jacobi. Thank you so much to Herb. Thank you so much to our podcast engineer extraordinaire, Anton, the man, Keith. All right, people, love you. Take care. Listen to this a few times. Share with as many people as you can. And God bless.
Yep.
See you guys.